Welcome everyone to this video, and in this video I'll be talking on the topic managing trade and scaling out profits. Trade management is just as important as trade entry. The way a trader handles an open position often determine overall profitability. Even the best setup can turn unprofitable if mismanaged, while an average setup can yield strong results through disciplined trade control and scaling. Understanding trade management. So this is also a key aspect of every trading, right? So knowing how to manage your open position is going to help you a lot. I recall very well when I started trading newly, I joined a signal channel. My trade at the end of the day, I will see a loss, but the channel owner on the other hand is going to announce take profit hit. I will be wondering how it was that bad till sometimes I have to confront the channel admin. Unknown to me, it was my carelessness and my lack of experience to manage the trade properly that caused me those losses. So these are the core components of trade management. Risk adjustment. Always risk a consistent percentage per trade. I said this, don't risk more than 1 to 2% of your account. I would say don't risk more than 1%, nothing like 2%. This market is very, very crazy and risky. So don't risk more than 1% of your account. We just talk about this. So this means if you have $10,000 trading account, don't lose more than $100 per position. So that simply means you have to pay attention to your stop loss pips, then the loss size that you're using. Also, we are going to talk about risk management. I will show you guys the formula how to calculate all those things into the equation. So you just input your trading equity and other parameters into the formula. It will give you every step that you need to manage your account. We are going to talk about that briefly, maybe during the last module. So stop loss movement. As price move in your favor, shift your stop loss to break even or trail it below new swing points. What does that mean? Let's say this is market structure. Sorry, let me change that to black so we can see it clearly. This is the structure, how the price has moved over times. Higher, low, lower low, higher low, lower low, right? So these points are simply entry and take profit level respectively, depending on the direction that you enter the trade from. So this is my lower high and this is lower low basically. So if you take an entry at this point, let's say sell in this case, this is your entry, this is your stop loss. So you know definitely that your take profit should be the next possible bounce on the lower low. That is the level that the price is going to hit next on the lower low trend line to return back. It doesn't mean how far the trade is going to go or is going to break to go in your favor. This is part of the trading plan. If you are targeting 30 pips per day, once you achieve that, please close your trade and go. Because if you allow greed to control you, man, the outcome is not always end well. The market is very crazy and anything can happen at any time. So this is your possible target, next key level that the price will bounce. In this case, if I was to trade, I've entered sell, this is the key level, so I'm going to set my take profit to align with this. So what adjust stop loss means is that you have executed trade at this point, right? So the price left your entry, move, let's say 20 pips, made the pullback continue downward. So as the price retests this place to create a new supply level, you can move your stop loss from this point to your entry. So with that, you are trading a risk free. Then the price is going as the price break this recent low and retest, right? Price break recent low, retest and continue downward. You can move your stop loss from this point to this level. With that, you're securing your trade is risk free and you have secured a profit. The first one was at the entry, so as the price continues breaking the low to head downward, you keep on adjusting your stop loss to book partial profit continuously until the trade reach your target, or if eventually it reverses at this point, you are leaving the market with certain profit level, though it is not your complete target. Then partial profit scaling up. Partial profit simply means Let's assume you executed this trade, right? You executed this trade. What partial profit means? You use 0.50 lot size, 0.50 lot size to execute this trade. So when the price move to this level, let's assume your target was total 60 pips. In my case, that is what I always target. Once I achieve this for the day, I'm gone. So when the price move right up to 30 pips, you can decide to close out 0.20 out of this lot size. So you are now leaving with 0.30 active lot size. So that's how to take partial profit. Your broker should have these futures. If your broker doesn't have these futures, please leave. Okay, I think I'm going to bring some of the best brokers that we have globally to this course. To this course or any other course in this platform. I will attach the link as well. So re-evaluation, constant monitor structure. If market conditions shift, example, draw resistance, form against a position, consider existing early or tightening stop loss. So if there's eventual a change in direction, there's nothing wrong closing and leave the trade without hitting your target. If you have seen a possible change of structure against your initial direction. This is a very nice trade right there. I'm sorry I've shifted on the topic. This is a very nice trade. This is bearish correction, or you can call it bearish flag, right? One of the chart pattern, price was coming downward. All of a sudden, price started ranging. This was the supply level. The price start ranging, facing upward. Then we see a breakout at this point. So price is coming back to retest this level basically. Then we will see a sharp drop to continue the downtrend. This is one of the continuation pattern that we have in the market. That is how the pattern looks, right? Let's go back to our topic. So this is okay, scaling out. Take 50% of profit at the first resistance or support. So I'm going to show you what I've explained. This basically a situation that you open multiple position. Let's say this is Euro AUD, and normally your trading plan state that you should approach every trade with 0.60 lot size, but in this trade you need multiple take profit based on how the structure is forming, right? Mostly in a situation like this, as you can see how the structure has been moving. This is a very perfect case to fix a multiple position. So this is the initial trading plan, 0.60, but in this trade, based on how the structure formed, you want to go multiple position, let's say 3 position. So you are going to have Euro AUD, first entry, TP1, Euro AUD, second entry, TP2. Sorry, all these trade, you enter them at the same level, right? Let me illustrate that, please. Say you enter this trade, the same entry, these 3 position, this is TP2, then we have Euro AUD TP3. Same entry but different take profit position. So you now look at the structure and you decide where is my horizontal rail line. You decide to go, that is TP1, that is TP2, and this is TP3, right? TP1, TP2, TP3. So recall your trading plans will need you to go 0.60 per position so that you can moderate your risk management properly. But in this case, you want to go Euro USD times 3. So basically, I'm going to allocate more bigger lot size to the first entry because that TP is going to hit first. So I will now say, let me say, I will allocate 0.25 lot size to TP1, right? Then TP2, I'm going to allocate 0.15 lot size because TP2 is going to hit before TP3. How much is left in this case? 0.25 plus 0.15. So we have 0.40. 0.40. So let me allocate 20, 0.20 to TP2. So this is 45. I will now allocate 0.5, 0.45. This is 45, 60, 0.10. Am I right? I'm not. Let me see. 0.25 plus 0.20, 0.20 plus, okay, the last one is going to be 0.15. So this basically have to trade multiple position. So because your trading plan state that this is the risk, this is the loss side that is going to give you 1% if you lost the trade. So there's no way you can start opening Euro USD 0.60, 0.60, 0.60 times 3. If you go that way, if this is the loss size, let's say you are trading, you always target 80 pips stop loss. In my case, this is what I risk every trade. So 30 pips using this loss size is going to produce 1% risk. So if you go ahead, opening this three position with similar loss size 0.60, 0.60, 0.60, that means you're going to have 3% risk. You're going to put your equity at 3% risk. So this is basically how to split your risk properly. So that is target profit scaling. So in this case, once TP1 hits, you move your stop loss to entry for TP2. As the TP2 hits, leaving TP3 running, you move your stop loss to TP1 position. So gradually, that's how you scale till you reach your target. Always make sure the stop loss is not too close to the current, price movement, right? Always allow it to break a low or high depending on the direction and retest before you move your stop loss. So I've talked about break-even advanced scaling tips. So basically, that is how you can scale your take profit or stop loss, manage your trade gradually until you reach your target. So basically, I'm going to see, I will put some of these things into display. It is quite unfortunate that we cannot go live to see some of the action that I usually take, but I'll try as much as I can to post the results while I'm putting some of these things into practice. So see you guys in the next video. Thank you.